Hey, it's Rocky here, and I just wanted to quickly show you this big rundown we had last night in the Dow Jones Index into what is possibly a significant low in this market. This area here is an old low going right back months and months and months, and they sold it off. They had a bit of a counter trend here, then they sold it off hard into the low here, and then it started to rally. And looking at this range from here to here, this looks like a typical three-wave counter trend rally. It's gone up there, a little bit of a pullback, and up to here, to exactly 618 retracement of this rundown, and then it's rolled over here. So if we look for our swing setup in here, you can see the last swing low is here. So let's put a line across there. That last swing low is there, and now we're trying to rally here. Now we've taken out that low and we're trying to rally back. So if this can't rally up here and it takes out these lows here now, that gives us a valid sell trade for our swing setup. And that should give us a run down to the midpoint. If this is the first leg up, it should give us a run down to the midpoint. If this is just a counter trend and it's just an ABC counter trend, we could go down here and we could even go lower. But my thinking is this here has put in a significant low. We're going to come down here now to around 50% or 618 of this range here, and then we're going to rally again. So we'll see what happens here. If this takes out this low, I'll be shorting it, expecting it to go down to about here or here, and if it gets to there and starts to try and rally, I'll get out of that short and I'll be looking for a place to buy. So you can see we've traded down here below this low, so I shorted the market just here. It fell quickly down and then it's rallied back up here. So I'm expecting this now to trade down to around 50% here, maybe 618. If it starts to rally, I'll get out of this position and we'll have to reassess where the market's going. But for now, we have a valid swing trade here. We've got our swing low there, we've got our swing high here, and we've got a nice space between the high and the low, and we've taken out this low here, this swing low. So we've got a valid short trade entry. Our 20-period moving average is down. We're trading below the 8-period exponential moving average. Everything looks set. So we've come up here to 0.618 retracement of the previous leg down. So everything looks great for this to go down around here somewhere. So I'll just keep updating this as the bars continue on and we'll see where we go from here. So just updating this trade, you can see we've come right down here and I've put the retracement values on here now. So I've taken off the retracement of the previous run down and I've put the retracement values of this range here. So we've got 23.6, 32, it's at 32% now. So we might get a bit of support there. 50% and 618 are the main ones. So if it comes down here and starts to try and rally, then this could be just a wave 1 and this could be a wave 2 of the next rally. If it comes down here and keeps going, then we could be coming down for a retest of this and it could even be going lower. And this here is the 2-minute chart that I like to use as well, just to keep an eye on what's going internally. That's where we got short just there. Had a bearish engulfing signal right there, which I wasn't looking at before. And then we've just come down here nicely. So we'll keep an eye on this and I'll update you again shortly. Hey, it's Rocky here with an update from yesterday's video. So we've let the market go now for a while. Here's where we got short just here. And I was saying how I expected it to come down here to around between 50% and 618. So that's why I sold it here. And as forecast, it's come down here and it had a pause at 50% retracement. Then it had another lower high and it came down here to right on 0.618 retracement. And then it had a rally which made a higher high than this high. And we came down and we just touched there again to the same price. And then we started to rally. So as soon as it took out this high here, that was a good place to get out of this position because it had hit our price target here and it had a bullish engulfing candle here, which is usually a good sign that it's trying to rally, especially when it comes down to 618 retracement. Then we had this significant rally, doji, came back down, and then we started to rally here. We had a higher high here than this high, a higher low here, which was Gann's basis for an uptrend, and then we started to rally. Quick burst upwards, came down, another higher low, and then away it went, and it came up. Now if this was going to continue this trend, it should have done around 100% of this previous range, but it couldn't do 100%. It came up to around 618 of the previous range and it's pulled back. Now it's come back down from this low to this high. It's come back down 618 retracement there and it's starting to rally again. So this is very difficult to trade, this washing machine movement here. You can get long and short and long and short. So when it's got these overlapping swings like this, you're quite often better to just stay out of the market until it starts to trend. Like this is a nice trend, had a high low, and it rallied straight up. This is a lot easier to trade than this kind of action here. So of course you don't know it's going to look like that, but as soon as it starts having big pullbacks like this and big pullbacks like that, then it's usually a good idea to let the market sort itself out and tell you more clearly what it's going to do. Here's our 2-minute chart. It came up, had a lower high, slight false break of this high here. As we've discussed in previous videos, fast moves come from false breaks. So when you see a lower high followed by a lower low, that's a signal you're probably going into a downtrend. But then when it comes up and it breaks that high just by a few ticks and then changes trend, you quite often get fast moves from these false breaks. And that's exactly what happened. It came down, nice big downtrend down to 618. And now we've got this washing machine thing going on here. So this is a sign that I don't really want to trade this because I'm not sure where it's going. So I hope that gives you an idea of how you can trade into a counter trend low and have a high degree of confidence that the low is going to hold. Remember, we had a higher high than this high. We came down, we had a double bottom. This was actually a slightly higher low, and then it started to rally. So you don't want to be holding a short position if you're trading this counter trend. You don't want to be holding a short position once you see this trying to rally out of a 618 retracement. So that's it for this video, and I'll talk with you in the next one.